Hello and welcome to Finextra. I'm Josie Waite and I'm here with Jason Lane from Mastercard, and we are talking about balancing strong customer authentication with convenient consumer experience. Thank you for joining me, Jason.
Appreciate it. Thank you for the time, Josie.
Under PSD2, the banks need to comply with strong customer authentication. What does this mean for the industry and Mastercard?
So from a Payment Services 2 directive, really what the regulation is focused on is opening up the payments landscape to new competition. Why? To drive innovative products that will ultimately enhance the way consumers and cardholders engage with retailers and merchants. So from an industry perspective, that's a good thing. We're going to sort of see the, innovation sort of come to the fore, and ultimately, if it's delivered correctly, the consumer will be the ultimate winner. And hopefully for the banking institutions, so retailers as well as issuer banks, we'll see a reduction in fraud.
How will the drive towards two-factor authentication reduce the levels of fraud the industry currently suffers from?
So when we look at fraud in the payments industry today, what is at the core of what Mastercard offers or brings to its customer base, retailers and issuers, is in fact the safety and security of being able to transact with our product. Now, it is true in an online world, so when I make an e-commerce transaction, that fraud tends to be a little bit higher because there's that lack of personal identification between myself and the retailer. But we live in a world where most of our transactions, I as a consumer, am doing more shopping, more researching on the internet versus sort of walking into a store. So what we need to sort of seek to do as an industry, and sort of what the PSD2 through its strong consumer authentication calls for, is a stronger way to identify I am who I say I am. So there's two ways of doing that. So today, I would need to enter a password when I'm making a transaction online. Essentially going forward, what PSD2 will call for is for me to authenticate myself through two dynamic factors. So one of that could be a dynamic password, the second one could be through a biometric. So I'm already well trained using my iPhone to use my thumbprint when I access TfL or the Underground in London. So how do I then take that as a way, as a use case to authenticate myself when I'm making an online transaction? So this is essentially what's being called for. And why? Why are we doing this? Ultimately to give the retailer and the bank the assurance that I say I am who I am, and ultimately that should, if deployed correctly, drive down fraud.
Will this two-factor sign-in improve consumer experience? Will it make it more frictionless?
It's a very good question. Will we see a more frictionless environment come through? Now, different stakeholders will give different viewpoints. What is true today, when you look at sort of a one-click checkout, the less hurdles you put in front of the consumer, the easier the sale goes. That's something we all need to aspire to. And one of the challenges around this strong consumer authentication element is exactly that. When we introduce new factors or new steps that the consumer has to go through, if they're not delivered or implemented in a consumer-friendly fashion, it'll cause the consumer to abandon the sale. And nobody wants that. The retailer doesn't want it, certainly Mastercard doesn't want it, neither does the bank, because the person that does get impacted is the very person we're trying to protect, which is the consumer. So around the implementation of the strong consumer authentication, we've got to be careful that it's got to be a winning solution to drive frictionless payments even further. The reality is the jury's out, and I think there's a genuine concern across the industry that what the regulation is calling for is a little onerous and actually may increase friction rather than reduce it.
Is there conflict between the banks reducing fraud and consumers looking for better onboarding? And can these two important things be balanced?
I think that's a really good question, and that is at the heart of the tension around strong consumer authentication, right? So let's start where we've been talking about putting the consumer first. So ultimately what the consumer wants, they're well trained today to have sort of a seamless, safe, secure payment interaction. What they want is not to have to type in 16 digits of a card code, or remember 12 different variations of a password in order to make a sale. So they're looking for a simple way in which they can sort of engage with merchants. So that frictionless experience is ultimately what I want. I want efficiency, I want expedience, and I want to be able to do it one time for all types of transactions. Now, from a banking perspective, they have to approach it a little bit differently. So Josie, you and I are independent consumers. You are with Bank A, I'm with Bank B. The way Bank A will require you to authenticate who you are will be different to what my bank will require. And then that'll have implications for how the merchant, say a retailer that we're both shopping online with, deals with you versus how they deal with me. And so we could sort of face 1,000 flowers blooming in terms of how to authenticate you versus myself versus the general population. And so yes, there will be this tension. So what we really need to be seeing is sort of a more ubiquitous approach, almost like the VHS of payments, if we go back to a 1980s sort of use case, of really how consumers need to engage so that whether I'm shopping at Amazon or iTunes, I have the same experience and my bank offers the same authentication component as your bank does. That's really what we need to be seeing at the heart of this in order to reduce this tension between what banks need to do, which is one, authenticate who I am, reduce fraud, versus what my objective is, which is to make a sale as quickly as possible.
That's great, thank you, Jason.
Thank you very much.
And thank you for watching.